Welcome to the EY Asean Ignite video series. I am Brian Thong, your host and EY ASEAN Financial Services leader. In this video series, we will feature insights and perspective on topics impacting financial institutions in banking and capital markets, insurance, as well as wealth and asset management entities across Southeast Asia. Now, demand for ESG reporting is growing due to increased scrutiny from stakeholders, including investors who are looking for environmental, social, and governance disclosure to steer in their investment decision-making. In this video, we explore how FIs can address the misalignment gap in order to weave sustainability considerations more effectively into corporate reporting, as well as what the future of reporting will look like. For today's episode, I'd like to introduce Nina Antel, EY Financial Services Business Consulting Partner, who will be leading the discussion today with our guest speaker.
Our special guest today is Aloysius Fua. He is our EY Financial Services ASEAN Sustainable Finance Leader. Hello, Aloysius. Thanks for joining me today for the session. Aloysius, so companies and investors are not aligned on their perspectives on the best ways and means to weave the sustainability into corporate reporting. How do you think they should address the gap?
Okay, a company's sustainability disclosure is an important part of insights for the investors' assessment in terms of how the impact of sustainability affect the company's performance, risk management, as well as long-term vision or value proposition, right? So the quality of the disclosures are of utmost importance, as many investors are using that for their investment decision making. But the concern is that investors are feeling that the quality of the disclosure may not be sufficient for them to make proper assessment in terms of the investment that's trying to make into. And that's something that we felt that is contributing to the gap, the lack of trust between the information provided to date by the companies to aid the investors in the decision making. So the question is that what do we need to do, right, in order to so-called reduce the gap between the investors and the companies? I think one of the key things that the company should look out for would be a case of trying to improve in terms of the comparability, the consistency, and the reliability of the reporting. And in that sense, some of the key elements towards that could be a strong governance structure in order to ensure that the disclosures are reliable. And of course, there's also external factor that's helping in terms of uplifting the comparability and the consistency of the reporting frameworks, as you can see from the ISSB that's been announced earlier in the year as well. So in that note, I think having a strong governance structure and ensuring that the whole organization are brought together can definitely enhance the quality of the reporting and assist the long-term investors in understanding the long-term value proposition and value of the companies in terms of how they're going to manage the impact of sustainability in the next few years.
Can you share a few action items that can help transform the future of reporting and bridge the stakeholder disconnect?
Okay, I think for the start, we can look at this in terms of two perspectives. There's going to be these external factors like this establishment of ISSB, which will help in terms of, like I mentioned, establish a global standard to ensuring consistency and comparability between the reporting disclosures. But then more importantly, right, is actually on the internal implementation aspect for the various companies. Having a strong governance, I mentioned earlier, it takes a whole organization. But question is that what roles is expected to be played by each of the parts of the organization? It's not a chief sustainability officer responsibility on their own, right? It's actually comprising the first line, the second line, the third line of the organization. So for instance, let's look at the traditional role of a HR. You might think that they're only looking at payroll or looking at HR matters, right? But question is that they do contribute a huge part towards the disclosure aspects of things, from like perhaps monitoring, reporting on the social metrics pertaining to the organization, or even a case of helping to formulate the training programs pertaining to the organization itself to ensure that the whole of organization do appreciate, understand in terms of how they can contribute to the sustainability roadmap of the organization. And it takes the whole of organization to be appreciating as to what are the skill set that they need, what's the risk of the product they're pitching out to the market, what's the risk in terms of the exposure they're making from the various transactions they're undertaking. So that is a key part of that. Another example that I can give you could be pertaining to the internal auditors, right? They are used to be helping to keep the organization out of trouble by ensuring that all the key risks are audited. For me, I would say that now the risk universe has expanded to include sustainability risk as well. And pertaining to disclosure, they can help in terms of ensuring that the disclosure are actually reliable, complete and accurate, right? So sort of things that they could be doing could be auditing the processes, the system, the data integrity behind the disclosures that's being issued. And even better, do a benchmarking with peer competitors to understand when it comes to sustainability disclosure, where does the organization stand among its peers, and ensure that it could also differentiate itself compared to the other similar organization, such that when it comes to the key objective of having the investors appreciate how the organization is managing the sustainability risks, the impacts, the disclosure itself can actually provide a point of view, the insights towards their decision making. Right? So in a nutshell, I would say that when it comes to the internal aspect, two key things towards the first step to ensuring better disclosure and closing the gap will be the governance structure, ensuring a whole of organization approach. And the second aspect will be a case of ensuring capability building. Right? For example, some of the things that we're doing for clients include climate activation workshops, ensuring that when the first line is out there pitching products, managing services for clients, they are well aware in terms of what risks are being constituted within the product they're pitching, and more importantly, ensuring that they can also understand what the risk exposure they bring to the organization as part of their interaction with their customers.
So that brings us to the conclusion of the topic today. Aloysius, thanks for joining us and sharing your views on the timely topic. Our clients and viewers, thanks for watching. If you have any further queries on what you have heard today, please feel free to contact us at ey.com, LinkedIn, or the links in the description. Thank you for watching, and goodbye.